You already know what a trend is. Trends are simple, right? But what if trends are not as simple as they seem on the surface? Much like candles, trends have a story. Each individual candle that makes up that trend has a story, as you know. But all of those candles together, they tell a much bigger story. Much like thinking of candles as just patterns is the wrong way to approach price action, thinking of trends as just a series of candles moving in the same direction is the wrong way to approach price action. There is so much more to a trend. For example, trends can be strong or weak. A strong bullish trend is a trend that makes a steep move up. A weak bullish trend is a trend with lots of indecision, which climbs up very slowly. How is this useful? Well, let's say you're in a short trade. Your stop is 50 pips, your target is 100 pips. You are currently 95 pips in profit, and you want to extend your target. You cannot randomly decide to extend your target. You need to read price action and see if extending your target is smart. There are many other reasons you will want to be able to differentiate between a weak trend and a strong trend. And while the differences may seem obvious, sometimes they're not. There are several things to consider when assessing the strength of a trend, but the most important thing is higher highs, higher lows, and lower highs. What are higher highs and higher lows? A higher high is created when a candle pushes up beyond the high of the previous candle. A higher low is created if a candle is unable to push lower than the low of the previous candle. A lower low is created when a candle pushes below the low of the previous candle. And you guessed it, a lower high is created if a candle is unable to push beyond the high of the previous candle. And why is this important? Well, it's in a buyer's nature to push price up. It's what buyers do. Buyers buy. And when they buy, price moves up. And how does price move up? By creating higher highs and higher lows. In this bullish trend here, we can see that almost every candle pushes up from open and creates a higher high than the previous candle. And price does not move down very much from open, does it? So every candle has a higher low than the previous candle. As long as higher highs and higher lows are being created, it means that buyers are in control of price and price is in a bullish trend. What about sellers though? It's in a seller's nature to push price down. And when price pushes down, we see lower lows and lower highs, as you see here. So as long as lower lows and lower highs are being created, sellers are in control of price. But trends rarely look this strong. Most trends are messy. Look at this trend here. It is clearly a bullish trend. However, not every single candle gives us a higher high and a higher low. So what makes this a strong trend? Well, most of the candles are showing higher highs. So if we're not seeing higher highs on every single candle, on average, there are enough higher highs and higher lows for price to move up. But why is this important? Well, knowing when price is trending is vital in your price action analysis. And knowing when a trend is dying is even more important. Knowing when a trend is dying allows you to close out trades at the right time. It allows you to potentially enter reversal trades, and it allows you to do a whole lot more. And this is where a trend's health comes into play. What is the difference between a healthy trend and an unhealthy trend? Well, a healthy bearish trend will show you consistent lower lows and lower highs. You cannot expect every single candle to show you a lower low and a lower high, but you want the majority of them to show you this. Now, what about an unhealthy trend? Well, let's look at this bearish trend here. It has a few lower lows and lower highs, but there's also a lot of ranging stages. And those ranging stages are showing higher highs and higher lows. So even though price is trending down, do the bears/sellers inspire much confidence? No, not really. They don't seem very strong at all. This is an unhealthy bearish trend. But how would this be used in a real trading situation? Well, let's say you're in a short trade. Price is trending down quickly, and you decide to extend your target as a result. Why? Well, you look at this trend and sellers were showing consistent lower lows and lower highs. It was very clear to you that you were seeing a healthy bearish trend. And you don't want to pull out of the trade at your target when price was clearly in a healthy trend, a trend which was likely to continue moving down. So you extended your target to take advantage of this trend. But what happens next? Oh, that candle's a bit annoying, isn't it? It didn't make a lower low, which kind of sucks. But it didn't make a higher high either, so that's still okay. Next candle? Now this candle has failed to make a lower low, and it's also made a higher high. Well, that's not good. Higher highs tell us that buyers are gaining control of price, as do higher lows. So at this point, it might be a good idea to place your stop loss above the most recent candle. Why? Well, if buyers make yet another higher high, it suggests that this healthy bearish trend is over and it's becoming unhealthy. And since price has already passed your original target, getting out before this unhealthy trend completely dies is a good idea. So keeping an eye on higher highs and higher lows and lower highs allows you to assess the strength of a trend. It allows you to assess whether the trend is healthy or unhealthy. Now let's look at another example. Let's say you're in a long trade. Your entry is here, your target is here, and your stop is here. Again, price is almost at your target, but the bullish trend leading up to your target was clearly unhealthy. It's a mix of higher highs, higher lows, and lower highs, and there's a bunch of ranging stages mixed in. It took a while for buyers to claw their way up to this point. So would you want to extend your target on this trade? I'd have to say probably not. The bullish trend is completely unhealthy, and it suggests that buyers will struggle to move up much further. So exiting here at your target and closing this trade out seems like the smart choice. These two examples are very simple, but the more you pay attention to highs and lows, the more you will start to appreciate just how useful the information they give you is. But a trend strength does not end with highs and lows. There are more factors to consider when looking at trends, and we're going to look at those in the next video.